Hi, good morning. After a very, very interesting and candid session, we're going into another chat session, and this is on natural gas. At one point, gas was considered as a bridge fuel, but the upheavals of last year in the global gas market, particularly after Russia's invasion of Ukraine, has sort of dispelled this myth. There have concerns on inflation, food security, as well as energy security has impacted advanced, emerging, and developing economies around the world. In Feb this year, IEEFA released its first global LNG Outlook. If any of you have not had a chance yet to go through it, I urge you to go through it because a lot of the trends that our analysts saw in Feb continue to hold and are likely to hold over the short and the medium term. This report was essentially a consolidated outlook of key demand centers. So we had Southeast and Southeast Asia, Europe, and the entire global LNG supply chain. I want to highlight one or two, a few key headlines before I hand over to our star-studded panelists to deep dive into each of these regions. So first, the high global LNG prices and elevated price sensitivities are likely to put pressure on demand, especially in key Asian consumer countries, which impacts demand growth. And over the last couple of months, while we have seen Asian and TTF prices cool off, they're still well above their historical average, which has in turn impacted demand. Now, what this has also done is that it has started spurring even more investments in clean energy. As the IEA has pointed out very recently, in 2018, for every dollar spent on fossil fuels, a dollar was spent on clean energy. But as of this year, for every dollar spent on fossil fuels, $1.7 is being spent on clean energy investments. Europe became the new hotspot for LNG, something that had never happened in the past. This is unlikely to continue, as our analysts will tell you in detail further. And even without that, the G7 commitment that came out very recently to decarbonize the electricity sector by 2035 also sort of holds to the idea that whatever uptick we are seeing in European demand so far is unlikely to sustain going further. Lastly, as Clark will deep dive into this, any liquefaction projects coming online post-2026 are unlikely to see a big demand pool. So yes, there is some amount of cautious optimism amongst policymakers on the gas markets, but this by no means is a guarantee that we are not going to see future volatility, and therefore countries, all stakeholders need to do as much as possible to move away from this. With this, I hand over to Arjun. Arjun, how is Europe faring?
Thank you, Swati. I think I'm going to be standing on the podium. Let me see if this works. Is that right? Can you all hear me okay? Yes? Okay, fantastic. And I think this. Let's test. Okay, hello everybody, welcome. I'm Arjun, I lead the Europe team at IEEFA. And I'm standing in today actually for my colleague Anna Maria, who unfortunately can't be with us for health reasons, but I'd just like to give her credit for the excellent work that she has been doing and continues to do on this topic. So I'd like to stress that this overview presentation is really an introduction that I'm giving here. We are going to have a deep dive into European LNG in the breakout session immediately following this plenary. And we have 3 excellent speakers for that and moderation from our communications lead in Europe. So I would encourage you all, if you are interested, please do attend that session. It's not going to be recorded. But until then, you're stuck with me. So let's crack on. Okay, so I've started here on the, I've started here with a quote from our Outlook, which, as Swati mentioned, we published back in February. I'm not going to read it out, but I've highlighted two points there which are incredibly important for looking at European LNG demand. Well, not growth, but decline is really what we're expecting over the medium term. The first is prices, and not just high prices, but volatile prices. And this is a real significant shift that's happened in the last few years. and I'll come back to that later on. And the second is declines in gas consumption in Europe. And this is really a key factor when considering LNG demand over the next decade. And it's something which we think isn't always communicated strongly enough outside of Europe. So you're going to hear a lot about gas consumption. Oh. Okay, so to start then with consumption, taking a step back, a bit of context. Many of you probably know this already, but EU and European gas consumption has been declining steadily over the last decade. You can see the chart there on the screen. What is it used for? Well, about 40% is used in households for heating and cooking, and the rest is split between power generation and industrial applications. So they're really the three main kind of categories of consumption. And around 80% is imported. That's a rough figure, but that's only going to increase as domestic production continues to decline. And previously, Russia was the single largest supplier through pipeline gas to Europe, which supplied about 30 to 40% annually. But as you know now, since Russia's full-scale invasion of Ukraine last February, this has been substantially reduced. And so what's it been replaced with? Well, with LNG, more LNG imports, and also some more imports from other pipeline suppliers, as well as quite a significant drop in demand. And you can see that towards the end of the chart, the line drops down quite significantly. So that's the kind of the context. Coming back now to our outlook, and I'll ask you to bear with me here. There's quite a lot to go through on this slide. So, which will help if I change the slide. There we go. Okay, so LNG imports, as I mentioned, have increased. They were up 60% last year. And this is in line with our LNG demand forecast, and that's the dark blue line at the bottom. So it starts from 2021, you can see it's gone up. And we were also expecting that in 2023 it would again increase, but not as much. And then we were expecting after next winter that really LNG demand in Europe will begin to tail away. There is a really serious commitment underway in European countries to reduce gas demand from all of the sectors which we've mentioned. Policy is included as part of the Repower EU package. For example, they target around 40%, if not more, reduction in overall gas demand by the end of the decade. So on the slide, that's the yellow line, which is the overall gas demand at the top of the chart there. And actually, we were quite conservative in our forecast. We think that could really come down faster. So while LNG growth has increased in the near term, because of this drive to reduce gas consumption, that is why we show the LNG demand decreasing out to 2030. And so we forecasted, estimated around 150 BCM in 2030. There are other market forecasts out there which expect a higher demand, up to 200, say, BCM. But in our view, some of these forecasts may be putting too much emphasis on the plans for LNG import infrastructure, for new infrastructure expansion. And that's shown on the chart by the green line. And in our view, many of these plans, a lot of which were announced shortly after the Russian invasion of Ukraine last year and across last year, are they really overplay the level of demand later to this decade. So in March this year, we launched our European LNG tracker, which is a free resource on our website. If you haven't seen it, I'd recommend that you do check it out. And we launched it with a very clear message that we believe that there was a risk that Europe is overspending on unnecessary LNG import infrastructure. And we highlighted how this would benefit the gas grid operators that are building the infrastructures, regardless of how much they're used. and also that the costs of these would be socialized among energy consumers, which are already struggling with the cost of living crisis. Now, we received quite a lot of pushback from this publication, primarily from the gas industry. But what I am pleased to say is that in all the comments we received, we didn't really get anything that was factually disproving what we were saying. It was more subjective opinions about what would play out over the rest of this decade. Okay, so moving on. That was our outlook back in February. To bring that up to date, this is a chart from our friends at Bruegel think tank, which basically shows that the data so far this year broadly affirms what we were expecting in terms of LNG demand. This shows monthly imports from 2020 through to last month, and you can see that there is another uptick from last year to this year, but it's not as pronounced. The second point here on this slide is that there are still volumes of Russian LNG flowing into the EU. This is something we've highlighted in our reporting this year, and we understand that there are discussions underway at the EU level, but the timing on solving that is as yet unclear. So if you remember back to the chart, the total gas demand, which was our yellow line at the top, I said we were a bit conservative. We'd actually expected a bounce back in demand this year for gas overall in Europe. So far, we've not seen that. The chart on the right here is showing the monthly gas demand. Actually, it's a 12-month rolling average. And the dotted line at the top is showing the historical average from 2019 to 2021. And what you can see very clearly is that we're still below that, and actually we're still decreasing. I mean, the bar at the end is down about 20%. Now, of course, we haven't got to the winter heating season yet, but just to say, it does look like this demand reduction is ahead of even what we had expected. So now I'd just like to quickly come back and talk about prices, which I mentioned at the beginning. The chart you can see there is showing quite clearly just how badly gas prices spiked in Europe last year. And while prices have come down, they still remain about double what they were pre-crisis, the pre-crisis levels. But not just the level, so they're still high, but the real change we feel is that prices are much more volatile now than they were before. And this is a really significant change. Previously in Europe, gas was seen as a steady, reliable source of energy and cheap, whereas now, increasingly, it's unpredictable, prices are volatile, and they're still high. And this was summarized really well by the IEA in their World Energy Outlook at the end of last year. So I have a quote there, that the crisis damaged confidence in its reliability and put a major dent in the idea of it serving as a transition fuel. And I think that only really goes to strengthen our view on reducing gas consumption in Europe. Okay, so last slide from me. I'd just like to end here. I'd like to end here with just an update really on the alternatives to gas consumption. I mentioned the three main sectors. We've got households, power, and industry. In at least two of those, households and power, we have the solutions today to displace gas from those markets, and there is exponential growth in the deployment of those solutions. So to start with power, we have a chart on the right. This is from our friends at Ember think tank. You can see the green line at the bottom is showing electricity generated by wind and solar. For the first time last year, EU wind and solar generated more electricity than gas. And that's quite a significant milestone, but that trend is only going to continue. Quite recently, there was a report released by the European Scientific Advisory Board on Climate Change. This is the bottom bullet point, if you can read it. And they modeled 36 different scenarios towards the EU's 2040 climate target. And across all of those scenarios, gas was only responsible for up to 11% of generation. That's in 2030. So you can see on the chart, gas, it's the faint grey line, it's up at about 20% now, but that is expected, again, to decrease, even though coal is also being displaced from the system, and that's purely because of the growth in renewables, as well as increases in energy efficiency, and perhaps some changes as well in behavior. Then the last point I'd like to make is coming again back to households and household consumption. So the real solution there is heat pumps, electric heat pumps, which are more energy efficient as well than boilers. And so last year, again, was a record-breaking year in terms of heat pump sales in Europe. Early indications show about 3 million units were sold. This is 40% up on the previous year. And just that alone would replace 4 BCM of gas demand for heating. So with that, thank you very much. I'll leave that and pass on to the next speaker.
Thank you, Arjun. With this, we go to China. Ghee.
Testing. This
Both
mic?
work.
Okay. Yeah, right. I'm here to talk to you about China LNG. So, China is slightly different because they import 60% by LNG and 40% by pipelines. Because of the zero COVID policy last year, it was down about 9% last year, and people reckon it's up 7 to 8, but that's only a result of the economy opening up quite aggressively in February. So it's a ballpark number. First quarter was down, but the April was not bad, and as we get more data points, it'll probably be up about 8%. The real issue right now is the retail price of natural gas. So the way the Chinese run the price of natural gas for the consumer is to fix it at $8 MMBTU. It's a very elegant solution. It works very well because the consumer pays the same price every year as long as they have to. And it's not really working in Korea because the KEPCO current price for power electricity translates to about $11.60 MMBTU, and they're buying it at $23 MMBTU. So if you buy something at 23 and you sell it at 12, you tend to lose money. So they lost about 24 billion last year, and that's US dollars, just for the record. Yeah. Okay, so this is the marker price, and the way it's very simple. Just remember, Chinese will buy around $8, $10. They were buying at $6 on the pipeline. So the pipeline is a bit more complicated because the pipeline comes from Turkmenistan, Kazakhstan, Russia, and Myanmar, right? So there is a formula of pricing which is kind of secret. A friend of mine who used to work in PetroChina told me that. And it tends to be above $8 MMBTU. It has to, right? Unless we're back in 2021. And then basically what happens is the state just subsidizes the rest. So we don't have any inflationary pressure. Yeah. And every time it gets to around 10, the Chinese are very happy to buy, and they should. Yeah. So these numbers I just want to throw out there. So obviously China imported less LNG than Japan last year. So it was 64 for China and 72 for Japan. But in April this year, China kind of edged ahead of Japan. So, I mean, a lot of different things going on in Japan with the nuclear, powering down and now trying to power up. But maybe Chinese demand 8% plus from last year, 64. Yeah, okay. And so China's from Kazakhstan, Uzbekistan, so pipeline takes about 40% of Chinese. And I just want to apologize for the third bullet point. LNG didn't supply 52, it supplied 23. And I was just trying to figure out what happened there. And my conclusion was, one is my real age, and the other one is the age I want to be. So yes, I want to be 52, you guessed it, yeah. Yeah, so LNG pipeline imports picked up And hopefully, we get 8% this year for China. And that's it from me. Thank you.
Hi there. Hello? Can people hear me okay? Okay, good. I'm going to try to be loud. Oh, that's even louder. My name is Clark. I work on the U.S. oil and gas team for IEEFA, but I also track LNG both in the US and globally, largely on the supply side. Now, I may be biased because my job is to read headlines about LNG every day, but in my mind, LNG has emerged as one of the hottest stories in the global fossil fuels sector this year. And it's not just really one story. When you look across the world, there are a number of stories. Arjun's talked about one, about how LNG, the story that gets told in Europe sometimes, about how LNG helps Europe weather the crisis of missing Russian gas. But you hear also the stories in Asia, South Asia in particular, about how LNG created a crisis because LNG prices rose. We saw them skyrocket in some of the earlier slides. And in some cases, in some nations, they simply could not access LNG because Europe was buying it all away from them. So there's one story about weathering a crisis, another story about creating a crisis. But for the supply countries, the countries that are building new export facilities, really the story was, what crisis? This is amazing. This is a great opportunity, these price spikes, to move forward with projects that had lost all momentum, even before the COVID crisis, projects that simply couldn't get any traction. But with all these stories, I think it's important to recognize, let's see, does this work? How can I do this? All right. It's important to recognize some fundamental facts about the role that LNG plays in the global energy mix. This is a chart that shows gas consumption globally. Most gas that is produced worldwide, is consumed worldwide, is delivered by pipelines. That's the cheapest way to get gas from where it's produced to a market. There's a relatively small slice at the bottom in dark blue that's LNG. It's about 12% of global gas consumption right now that's delivered as LNG. And really that small slice is responsible for two main functions. One is to provide gas to markets that don't have any. That's places like South Korea, Japan, Taiwan. They don't have domestic gas supplies. They don't have pipelines. The only way that they're going to get gas if they want to buy it is by liquefying it and shipping it across the ocean. The other function is to backstop regional shortages. I mean, this is maybe an oversimplification, but I'll just take some liberties here. But the main function there is if there is a crisis in Europe, or a cold snap in North Asia, or a drought in Brazil, they can import LNG in order to backfill the energy shortages. So what this means is that very small slice of gas that's delivered as LNG has a lot of demand on it and a lot of uncertainty. Essentially, any disruption in the global energy system anywhere in the world can cause price disruptions everywhere. And I'm going to be the third person here to show a slide of prices. Here's a longer-term price slide of Asian LNG prices. It's actually really, there's one way of saying this, the line goes up and down, right? It goes up sometimes, it goes down sometimes, but in my mind, there are actually really three stories here. The first story is about inflation of the LNG price from about 2010 through about 2014. A lot of that had to do with the Fukushima disaster, with Japan relying more on LNG to backfill its missing electricity supplies. Then this inflation of price from below 10 to nearly 20 was followed by lots of new projects coming online around the globe. And what that did was eventually, as those projects came online, the price came down until by 2019 or thereabouts, it was actually not profitable for a lot of these new LNG companies, new LNG projects to export gas to Europe or to Asia. And then the COVID crisis hit and knocked the wind out of the sails of the global economy, and prices fell even lower. And there's a third sort of trend here, macro trend, which is the incredible volatility we saw last year. And that is, in my mind, and I think in IEEFA's view, has reinflated the global LNG market. It has created pressure for new LNG projects, but it's also going to create the same kind of pressures that caused the decline in prices that we saw from 2014 to 2020. And that's because with the new LNG price volatility, all the excitement around it, there have been a lot of new supply projects that have been authorized over the past year. This is a chart showing all of the global LNG projects under construction right now. This is not speculative. These are actually bulldozers on the ground building new plants. 2023, this is actually for the remainder of 2023, it's relatively small. 2024 is slated to be what you might call a normal year. That's about the supply addition you might see on average over the past decade and a half or so. Then what we see in 2025 and ramping up into 2026 is a tidal wave of new supply projects coming online. Some of these projects were actually started pre-COVID. They're just on a slower timetable. That's like LNG Canada, which was sanctioned in 2018, but won't start coming online until 2025, roughly. But there are others that are rushed into service, or being rushed into service because of last year's energy crisis. This is another look at that same stack of projects. This is sometimes seen as just a North American phenomenon with US and sometimes Mexico, Canada, but it's actually a global phenomenon. Qatar, Russia, Mozambique, Nigeria, Australia plus Indonesia, Gabon, Mauritania, Senegal. There are projects all around the world. And of course, this is just the stuff that, again, bulldozers on the ground. This does not include the many projects that have been proposed and are just waiting to get financed right now, some of which have made, at least in the US, some considerable commercial progress, a lot more in Australia as well. I'm showing you this slide just because I made it. It actually, but this shows the US LNG build-out. We're here in this right now at this sort of like little flat spot. Some of these projects are actually in Mexico, but sourced with US gas. But we're in a sort of a relative lull right now, and starting in 2024, we're going to see straight line growth from the projects that, again, that are just under construction. So this raises a question, all this new construction, what is this going to do to domestic gas markets around the world and in the US and in North America and so forth? The old model is that this would do nothing to prices because LNG was sourced, the feedstock came from what is called stranded gas. And this is an example of a high school curriculum that Shell has put out. It says stranded natural gas, no problem. We'll just turn it into LNG and ship it around the world. So that's the old model. Stranded natural gas is gas that is physically isolated from the markets where it's consumed. It is stuff that's, say, in northwest Australia off the coast where there's really no people around. So if you've got a resource like that, you liquefy it and you move it into markets. And so LNG traditionally, it's not that old, but the standard model that applied through about 2016 or thereabouts tended to be that LNG came from stranded gas rather than from gas that competes with domestic markets. But that is changing in the US. It has changed in Eastern Australia. It is changing probably throughout the North American market where gas for LNG actually competes directly with gas that is consumed by domestic consumers. We saw last year that prices spiked when LNG export prices spiked, and basically the US was exporting more and more natural gas as LNG and importing higher prices and more volatility as a result. We don't know if this is going to happen going forward, but the EIA, which is that's the US Energy Information Administration, which is often slow to update its models, thinks that, yes, in fact, as the US LNG build-out continues, especially if it continues at a fast pace, we're likely to see higher prices for domestic gas consumers. So we may have this sort of weird confluence of events where the global price of gas falls because of all the new supply that's coming online, even as US gas prices or North American gas prices could rise. So just to summarize, LNG backstops regional gas shortages, and that creates the volatility that actually makes it interesting to traders, interesting to a lot of LNG producers. There is a tidal wave of new projects coming online starting in 2025. that is going to probably flood the market, creating a supply glut that will, we believe, run the risk of crashing or cratering global LNG prices. And finally, where LNG exports compete with domestic consumers, we have to expect upward pressure on domestic gas prices, which is actually going to be a problem for both LNG exporters who have to buy it, as well as domestic consumers. So thank you. Questions and answers?
Thank you. I think we've been very, very efficient, and we have time for Q&A. Please, can I ask you to introduce yourself and keep your questions short? Thank you.
Good morning. Thank you for the presentations. Feridun Sushansi with Menlo Energy Economics, a local consulting firm. I am totally confused now. The first session, climate is a problem. We need to move away from fossil fuels. Second session, business as usual. What are the investments? What's happening with LNG? What's happening with prices? None of you mentioned the climate, or LNG's gas is better than coal, but it's still got a lot of carbon. Am I missing something? This session didn't talk to the people in the other session, or am I in the wrong conference?
I think, if I can just respond to that, very good point. I think one of the points of this session is to give our analytical view about what's actually happening in the world, rather than what should be happening. I agree that gas is a problem. There's a lot of greenwashing around gas, but I thought that the point of it, that what we really need to get across right now, what our role right now is to help folks understand what's actually happening in the markets and how that dynamic is unfolding. I'm certainly, I can say, very troubled by some of the trends that I'm looking at. For the US, we are looking at a massive expansion of natural gas exports that is likely to lock us into continued climate warming emissions, from an industry that has shown that it is absolutely unable to control its methane leaks, for example. So I have plenty of things to say there, but I don't know if that sort of answers your question. We didn't talk to the first people, but we're the market analysts. So,
please.
Thanks to the panelists, particularly Clary and Arjun. They have brought the overview of the world and LNG and of course gas, short term and medium term. Now I am just adding a perspective to their whatever they have said for this August audience. See, this short term fluctuation, volatility, demand, supply, price, projects coming up, supply increasing, prices responding, equilibrium, all these things will go on in oil industry. Nothing new. If we are a player in the oil industry, we see this kind of short-term, long-term gaps. But what actually is the question, besides whatever has been raised here, is that gas is going to be a transition fuel. Okay. Now, if we accept that as a statement, then the question is, how short or how long is going to be that transition? We have been talking of transition for the last 10 years, and perhaps we will be talking of transition for the next 20 years. The reason is, as Arjun said, that gas is being consumed in households, in industries, and in industry, largely fertilizer and power. What is going to come in, which is very much in the literature just 1 month back, so it might have not come to the notice of this audience, therefore I am bringing it out here, that gas will find its many more uses or applications. For example, I am a holder of gas. I am Qatar, I am Abu Dhabi, I am Australia. I am sitting on what is called stranded gas. Now I have two options. Either I convert it to LNG and then bring it the product to market, or I convert it to low emission hydrogen, low emission ammonia, and market the gas. So gas has a lot of future. My friend which is saying that gas is not linked to the decarbonization trend, that's not happening. Gas is the least fuel amongst the fossil fuels. Therefore, gas is a part of the decarbonization motion.
Sir,
And gas will find many more decarbonization applications. Thank you. Sorry for taking your time.
No,
but
no.
I thought I'll add a new perspective to this session.
no, it's a very useful perspective, but we've been sort of trying to dispel this perspective that gas is a transition fuel. This, to our mind, is a very 2011 story after shale was discovered and suddenly there was a glut. It's a very 2011 story. It's not a later in the decade 2020 story. And to your point on hydrogen, yes, the grey hydrogen is currently happening, but to also tag there, we're still not counting methane emissions. And even with grey hydrogen, there is methane emissions, there are leakages which we are not counting, which is linked to the climate story, which brings to the point that we don't think gas should be a transition fuel, even in any of its capacity. That is not to say that its role will not continue in the near term, but the importance of its role in the energy mix is diminishing, and that is what we are seeing. Therefore, the idea that while existing investments are there, we cannot have new investments. Sorry, but very happy to have your opinion.
Guys, I also want to answer our first questioner's question, which was quite valid. So my background's in banking, and we don't want to talk about philosophy, ethics, K-pop, whatever. That takes a long time. All I want to talk about is dollars and cents. Okay, the price the consumer can bear in China is $8 MMBTU, full stop. Okay, you don't come and tell me cost curve inflation. I need to pay my engineers more, steel costs more, whatever. Okay, that doesn't bother me. My price is $8 MMBTU. And that's why when the price was $6 MMBTU, China bought more gas. In 2021, they bought 117 million tons. And when the price went over $8 MMBTU, they bought 109 million tons. So it's just a dollars and cents problem, okay? As Clark saying, right now we've got finance behind us to get where we should. So if your cost blows out for whatever it is, don't care, you got to pay your workers more, your ships cost more, whatever, your shipping rates is more, doesn't bother me. My price is 8 MMBTU, and if you don't do it, we're not going to buy, full stop. So at the end of the day, it's all dollars and cents. And if you cannot deliver the price, no one's going to buy it. So good luck.
Also last.
Thanks. Larry Shapiro with the Rockefeller Family Fund and the Funder Collaborative on Oil and Gas. And this is a great presentation. And I guess I just wanted to say a word or two and then ask a question. Is if I had been asked at the beginning of February of last year what was going to happen with all these proposed LNG export facilities in the United States, I would have said almost none of them will happen. And then things changed in the world, and the, I think, very cynical rationale for why these projects should go forward, which is not really a financial or economic rationale at all, is, well, we have to figure out a way to replace Russian gas for countries in the EU, and the politics in this country radically changed, including yes, Republicans are worse, but the politics changed in the Democratic Party, and an administration led by Joe Biden suddenly seemed to be like evangelically supportive of gas export, and it now looks like, I don't know how many of them will happen, but some of them will happen, and many billions of dollars is going to be invested in these projects, supposedly to deal with gas needs in the EU. And I know somewhere around here, and we'll hear from her, later and tomorrow, Svetlana Romanko, one of the real heroes of the climate movement, has been saying, well, she's Ukrainian. We don't need gas to help Ukraine. We don't need gas in the EU. So I just wonder, everything you say all makes sense, and the economics don't seem to work, and yet still it does seem like billions of dollars is being invested in export capacity in the United States to do things elsewhere in the world that really don't need to happen. And so maybe you could explain why that's happening, because it's a mystery to me. So thank you.
Clark?
Yeah, I have an answer to that. I don't know, I'm not in the C-suites of these companies, but the reality is that if you are an executive or insider in an LNG company, you get paid not by building a successful project. You get paid by obtaining financing. You get paid when you borrow the money. So all the talk about, and so this is like basically if you're a banker or an executive, you position yourself near the biggest fire hose of money you can. You hold out your cup, some money splashes in your cup, and you walk away to your house in the Hamptons. That's just how it works. And you can't sort of think, you can't overthink like why are they doing it? It doesn't make sense, because the insiders are getting rich. That's how it works. So if you think of it through that perspective, all of the talk about supplying our allies in Europe, well, before it used to be all supplying our allies in Asia. It's just whatever is the operative explanation right now that helps you get the project moving forward, so you can get acquire generational wealth and retire to your beautiful home. So that, I think, I'm being a little bit sarcastic, but not too much, because really fundamentally the arguments we hear about the benefits of gas, the benefits of exports, whatever, it's all in service of the fundamental goal of getting these projects financed, after which it doesn't really matter what happens.
Okay, I think we are at the end of this session. Thank you. You've been a very wonderful and engaging audience. There are 3 breakout sessions that are happening. Did I cut you off? No, right?
3.
Yeah. No. I thought I cut you off.
No. That's all good.
So there are 3 breakout sessions happening. One is here, one is ballroom, gallery 1, and the Atelier ballroom. We hope to see you all there. Thank you.